the Irish Portuguese Business Network. My name is Sharon Farrell. I am the current chairperson of the Algarve branch of the network. The IPBN is set up to assist business people to network and prosper in both countries, Ireland and Portugal. It offers its members and new arrivals a useful source of contacts to support with their business development and social integration to the wider community. Essentially, our network offers a complete support structure to anyone looking to make the transition from Algarve, or for Ireland to Algarve. On a broader level, Ireland and Portugal share many similarities, from our population size to GDP to key growth markets such as IT, renewable energy, tourism, agriculture. As nations, we are a natural partner with a close bond, which is clearly demonstrated through the growing bilateral trade and increasingly large Irish diaspora in Portugal. Today's topic, as you all know, is about all things finance, and we'll look at the issues you should consider or be aware of before you make the move, the benefits the Portuguese government can offer you as a resident here, and also look at the incentives offered to those who would like to spend a longer time in their retirement here. I'm very excited about this webinar today. Obviously, it's of particular interest to myself, as I'm working as a regulated financial planner here in the Algarve with Blevins Franks. We have three amazing speakers for you today. We have Gavin, Isabel, and Justin, who will give us the benefit of their insight, experiences, and individual areas of expertise in relation to what steps you should take or be aware of when relocating to Portugal, and how best to make it work for you. We'll try and keep it as conversational as possible. And if you have any questions throughout, just throw them out there and we will pick them up at intervals as we go. And Arnold, if there's any that we miss, you can let us know and we will pick them up after the webinar. So first of all, I'd like to introduce each of the panel members. Gavin, firstly, has been providing regulated financial advice to expats in Portugal for over 20 years. He is a senior partner with Blevins Franks here, and he's very conversant with the benefits of NHR and how it applies to your personal and business wealth, and also what financial planning steps can be taken to ensure that your finances are effectively managed both within and beyond the NHR period. Isabel is a senior accountant whose focus is to help small and medium-sized businesses extract value from their numbers and financial data. Her main drive is to bring financial control, clarity, and governance to entrepreneurs and high business growth, helping them with bookkeeping, cash flow, metrics, and improving profitability. Good woman to know. She will look at the issues around starting a business in Portugal and what to look for. And Justin, he qualified as a solicitor in Ireland back in 1980. He then qualified in the UK in 1991. And then, wise man that he is, he relocated to Portugal in June 1996 and is practicing as a lawyer here in the Algarve since. So you have the benefit, both Justin and Gavin have been here for over 20 years. So there's very little that either of them don't know about living here in Portugal. And Isabel has made the transition herself from Australia in the last number of years. So she is very familiar with all the things that, you know, spring to mind when you're considering moving country. So, well, I think we'll start off the questions really for you. We're looking at, you know, NHR, it's thrown about, it's bandied about, non-habitual residents. Gavin, you know, what is it? And are there any financial requirements to be eligible for this type of residence?
Sharon, thanks very much for the invitation from the Irish Portuguese Business Network. And there's nothing like being thrown into the deep end. What is it? Just to explain. Maybe if I start with the why. So non-habitual residents. Why do the Portuguese want to attract people? We've got a shrinking population here in Portugal, and it's important that we encourage immigration into the country to keep the economy moving and things moving forward. So the Portuguese government, and I would point out that this is of all colours. So Justin and I were here when this all began in 2009, and we had a very different colour of government in 2009 to the governments that we have today. But all through that transition, each government that's come in has looked at this and said it's a good idea. Why? It attracts people into Portugal, the tax concessions that are on offer. Those favourable tax concessions then bring these people in that spend their money on properties, which will have property purchase taxes on them. They bring more people into the country spending their money here, in which case they're in the restaurants and the shops, and in which case the government are collecting IVA, which is the equivalent of VAT, value added tax. That stimulates the economy, provides jobs, and off they go. So we understand why they want to do it. Who's it open to? It's open to anybody who hasn't been resident in Portugal in the previous 5 tax years. So it's regardless of nationality, it's a tax overlay. So it's not a visa that allows you to come here or a regime to come in under. It's about a tax overlay once you're here. So if you've got the right to be here, either through European nationality or through one of the visas that's available for you to come and retire here or come and work here, if you've got the right to be here, you can apply for the regime and you'll enjoy the favourable tax regime. So I hear you saying, what are the favourable tax regimes, Gavin?
Exactly.
Where's the fun of it? Where's the fun of it? The fun of it is that what they've said is that if you're working, either employed or self-employed, and your job fits into what's described as a high value occupation, and we've got lists for those, gradually over the years, the qualification for those and the descriptions of them have loosened. So they're relatively loose around the descriptions. And if you fall into one of the categories of high value occupation, then your income in Portugal will have a capped tax rate of 20% on employment or self-employed income. Other sources of income enjoy favourable treatment. So pensions coming from overseas, from Ireland, from the UK, from wherever, they'll have a 10% cap on the income tax rate that you'll pay. And then you'll have full exemption on certain things like dividends coming from overseas, interest earned overseas. And the general principle in that is if it had the possibility of being taxed in the country that the income or the dividend is arising, but that taxation right passes under the double taxation treaty to Portugal, then Portugal says, in which case we'll put it into the exempt category and you'll have no tax to pay on that. So some people have described it as a tax-free holiday. It's not tax-free. The devil's in the detail, Sharon. So you've got to have a look and say, what's the type of asset that's generating the income for me? Where's it coming from? And it certainly can't be from tax-favored jurisdictions. So we call them fiscal paradises here. Places like Jersey, Guernsey, Isle of Man, offshore centres. If they're coming from there, they'll be treated differently. But if they're arising in Ireland, for example, then they'll enjoy all of these benefits. And you enjoy that benefit for a full 10-year period. Once you have the scheme in place, it runs for 10 years. If you did a couple of years in Portugal and then return to Ireland for a period of time, the clock keeps ticking. So if you come for 2 years, go away for 2 years, and then come back, you'll find there's only 6 years left of the scheme still running in you.
Right, so the clock doesn't stop.
The clock doesn't stop. But in general, those are the benefits. And when I say the devil's in the detail, you've got to think about certain things. So for example, if you are holding a share in an international company, let's say I'm holding a share in Microsoft or Apple or Amazon, I will enjoy the dividend income from that share, will be free of tax or exempt with progression in Portugal. However, if I then sell that share, it could be subject to capital gains tax. So even individual assets and securities could have different taxation applied to them depending on the nature of the return, whether it's a capital gain or an income. So in it all, make sure you take advice, I would suggest, before you come.
I was just going to say that, Gavin. I think what you're saying is take advice.
You've got a panel of advisors today, so of course we'd say take advice.
Absolutely. You know, Isabel, from a business perspective, the Algarve is fast becoming an international hub spot and exceeding its world-renowned holiday brand. Its location is highly attractive to a wide-ranging Irish demographic, from like senior executives, business leaders, digital nomads has been the new thing, startups, remote and part-time workers. You know, tell me, what advice would you give to people who would be looking to relocate to Portugal and set up either on their own or a small business?
Okay, look, again, get advice. And first of all, thanks the Irish and Portuguese community for accepting on Australia. So very happy to be part of this and for being invited to speak. So basically, what I recommended is get advice, plan ahead on all aspects, but again, there are different concepts. It also goes back to your income. Let's say if you're coming here, you're semi-retired, but you still want to be active, you still want to work, you want to still do some consulting work, or start a little business selling something, you know, that, as we know, there's amazing things manufacturing here in Portugal. We got to look at it into how much are you prepared to spend, and also how much you want to expose yourself on the liability side of things. So as a freelancer, I'm just going to give you a quickly rundown as a freelancer, what you need to look for it. First of all, for anyone that might be outside the EU, like me, you need to make sure you got your Portuguese residency card, you have your NIF, and you have your social security number.
Sorry, Isabel, you might need to explain what a NIF is, because there'll be a lot of people on the webinar today won't understand.
Sorry, my apologize. That's your tax file number. What do you guys call in Ireland? In Australia, we call that tax file number. So basically, that's without your, let's say with your tax file number, you can't do very much here in Portugal. It's the first thing you got to do even before you're moving. Okay, you can contact your lawyer or your tax accountant that can apply that for you in your behalf. So it's a must do, even when if you buy a large equipment or anything, TV, they ask you for that. Basically, it's a very simple process. Your accountant can do it for you, apply you on for the taxation department here for your freelance license. One thing you gotta keep in mind, if you're under 12K, if you make under 12K a year, you're free from VAT. Above that, you also need to register for VAT. So that's that quarterly return. On top of that, you need to be mindful that you are liable for the social security payment, which I think in Ireland you call the PRSI. Am I right to say that? So you need to be, that's around, it's a minimum of 150 euros per month. Okay, so they are the things you need to look for it as a freelancer. As we all know here, the panel will support me on that. Once you set up yourself as a freelancer, you're exposed to some liability. So if you're moving here, buying a home, setting yourself up here, you might want to consider going to the small company. Okay.
How often do you have to make returns immediately, Isabel, or, you know, is there a period of grace, you know, on when the first setup?
Okay, basically the first setup, for an example, as a freelancer, you are free from Social Security for the first year. You're only on the second year you get to pay. You got to do you got your tax year, January to December. You have to do your return by May the following financial year. Okay, and I sincerely recommend it. You meet an accountant and get to speak to it, engage with an accountant, and I would say also a lawyer here. Because what it is they are very, I'm coming from Australia where you can get extensions on things. Here they are a little bit more difficult, might be the language barrier or so on. So I recommend that you get on top of your finances, okay, with regarding setting up a business. I'm just going to go very quickly on the company. Do you want me to?
Yes, please. Yeah, because there will be people coming here maybe wanting to set up, you know, a smaller business rather than just freelancing.
Exactly, because that you are protecting yourself, you're protecting your assets. Again, with the company, I sincerely recommend. I've seen in a lot of group chats that have been involved in presentations that people set up a company, they're looking the quicker, cheapest way, and they kind of regret later not contacting a lawyer or an accountant. So to get a good advice, because you need to bear in mind, where do you want to take your business? You might want it to grow, or you might just want that small little fun thing to do, like a hobby, as I call, you know, the mom and dad business. Again, I recommend it, see a lawyer, get an account advice, do the structure of the company. After your structure, what we do is we register you with the taxation department. That means give you free trading, okay? On top of that, we need to register it also for your social security and also so you can hire staff.
Is Social Security expensive here in the
Look,
Algarve, or is Portugal in general?
okay, let me pause. The Social Security per se, it works out at 21.4%. Okay. However, you can do that minimum payment of 150 euros per month. You really cannot get out of that. Okay, that is just so.
So everybody would have to pay that, Isabel.
You got to pay that monthly.
Yeah.
Anything to do when you're setting up a business here in Portugal, in Australia, kind of can get away quarterly. I am not 100% in Ireland, but here, anything relating to tax or your Social Security payment regarding to wages must be paid monthly. Just when you lodge your VAT, which is your quarterly VAT, that's a quarterly payment thing. Okay. Yeah. But that needs to be done. The other thing I want to bring out to it is that don't be scared by it. There is some really good incentives here in Portugal. Like right now, Portugal 2020, it's been extended, okay, it's quite funny, they call Portugal 2020, but it goes on to Portugal 30. So there is a lot of good incentives there for business, R&D companies. If you're a little engineer designing something, there is some really good grants. And guess what? Whatever idea, concept you come up with, it doesn't have to work for you to qualify. You just get a very good idea on it. So there is a lot of good things out there. Somebody that's starting a shop or a little business needs 1 or 2 helpers. Right now, the government is really helping new business come in and hire staff, and they can help you up to 5,000 euros.
So that's great, Isabel. Like what you're saying is if there's a lot of support out there for smaller businesses right now in Portugal.
And the Portuguese, it's really trying to make it welcome here. And another thing that just coming up with this new grant, this concept of grant that works what I just explained it before, you can actually pre-apply for the grant. So you arrive today, you got off the plane today, you open a company tomorrow, you can pre-submit the application. So it means you already got your feet at the door, because you probably hear a lot out there that people apply for grants, don't get approved because it's that story, first in, best serve. So there is a lot that supporting us. So that's something coming up now. The grant is not going to be open until May, but you can actually submit an application today without your company even being established, just the intention of applying it, and you get your foot at the door.
Yeah. Well, just on talking on property, Justin, I don't think there's much that you don't know about property here and buying property here in the Algarve. How long does the purchasing process typically take, Justin? And is there any main differences between it and, say, buying property back at home in Ireland?
Well, I'd have to say it's incredibly complicated here. Naturally to say that. But it's much more organized system here, in that everything is freehold and people don't have the concept that we'd have all grown up with, these long leaseholds. That really doesn't exist. So if one is buying a property and all of the paperwork is in order, it can be done within a week to 10 days. We've done them in as short as a few days, as long as 2 years. It depends on the buyer and the seller. Are you buying off plan? Are you buying on a development?
What is typically involved in the steps, Justin? You know.
Well, the first thing is obviously to find the property, which is really a personal issue, because people have got to decide where they want to live. We always advise that if you don't know exactly where you want to live, come and rent for a while. But most people tend to be buying because they've been coming here for years.
Yeah.
So they know pretty much where they want to live. Then it's a matter of using the agents. There's a lot of agents. Most properties are multi-listed. So with a little bit of research, people will come across nearly every property in the area that's available. Very rare to have one agent with exclusivity on a property. So it's just a bit of research.
No.
Then we would always recommend getting it surveyed to check planning and check the structure. After that, it goes on to the legals, because rarely here would you have a conditional contract. In other words, everything is checked before contract. So contract then is a commitment on both parts to buy and sell.
And when it gets to that point, Justin, is that, you know, where you are committing to buy? There's no walk away after that?
Both parties legally commit and a deposit is paid, and it's usually non-refundable deposit.
Oh, right, okay.
Then balance is paid on completion. And funny thing that happens with completions is that usually in the spring, the buyer wants to complete quickly to get the summer, and the seller doesn't want to complete quickly because he wants the summer. In October, the seller wants to complete immediately because he wants his money, and all he's getting now is bills. And the buyer doesn't want to complete until the spring because he doesn't want to use the property. So it's between those that the timing is, you know, it can be anything from a couple of weeks to a year. You know, it's rarely longer than a year, but it depends on people's circumstances. You know, we don't have the concept here of people like selling a house to buy another one. Usually people would sell before they buy, so you don't have chains.
Yeah, and some people were asking whether they had to purchase a property to avail of the non-habitual resident status.
No, just rent. Just a rental.
So long-term rentals, as long as you have a long-term rental contract, you can actually avail of it.
Yeah, buy it or rent it. So,
and other questions around that area, Justin, were whether it was better to purchase a house through an offshore company or in your own name.
Completely depends on the particular property. The government is continually trying to make it more or less advantageous to have a company, so they are decreasing in numbers. There can be still reasons, but the biggest issue is usually the inherent capital gains tax in an existing company. But every one of them is different, and you've got to look at the figures. I would never say not to look at one, but you look at one, and if it stacks up, you can save money by buying it because there's no purchase tax. But it's what are you buying, you know, so it's the same as buying any company. You just want to know what's inside in it.
Yeah.
Would you say, Justin, in the past it was the most common form of purchase? 20 years ago, everybody bought in an offshore company because it was a simple way of moving the shares without having to change the title of the property. And then as regulation and taxation changed, it suddenly became apparent that actually people should be considering offshore companies where it's appropriate rather than just because it's the norm. So you'd look at everything in its individual case and say, is it appropriate for the buyer and is it appropriate ongoing? And there's nothing to stop you taking the property out of the company at some time in the future or whatever, but you've got to take advice on it and understand that your situation won't be the same as everybody else's.
No, they're not two the same. They're all different because it depends on the price that the property went into the company at and when it went in. And like you said, 20 years ago, everything went into a company because in those days, tax was optional in Portugal. It's not anymore. So now people are tending to, they might end up sort of, the buyer now may be picking up the tax bills for previous owners, but it's an easy thing to see that, and it just needs somebody to have a quick look. It doesn't take very long, an hour at the most, if the papers are there, to give you the figures. So, but I would say, it depends on each one, completely different.
Yeah. In your experience, Gavin, are more people, you know, buying the properties as individuals nowadays rather than as companies?
No, I think it's what I said, but people get themselves in a little bit of a panic over it. If you see something that you don't recognize or it's unusual, but take advice because, as Justin says, you know, it was the norm 20 years ago. So you'll come across a lot of property that's already in corporate structures. And you've just got to sit down with the vendor and say, well, look, okay, what are the pros and cons? Understand the numbers. So as Justin says, if there's an inherent capital gains tax liability in there, that just becomes a negotiating point in the sale. As you would do looking at any corporate structure, you'd say, what are the assets and what are the liabilities? So the asset will be the property and the liability might be some outstanding tax. That outstanding tax may never come home to roost. It's a bit like the world debt situation at the moment. Are we heading to a reset or are we not? Who knows? But the point with that one is just understand the figures and how it relates to you. There are some people that have to buy in a corporate structure. So, for example, trust structures aren't recognised, foundations aren't recognised in Portugal as legal entities, and therefore, if you have a family trust, that vehicle cannot purchase property directly in Portugal, and you would need a corporate vehicle in the middle. So you're just looking at people's individual circumstances and planning around. I don't know where the number is, Justin, where you would say, but there's probably a point below a number, and whether that's 1 million, 5 million, or whatever it is in terms of property, where you would say really there's very little reason for having a corporate structure there, and that you would tend to buy in your own name, but there isn't a one rule fits all.
I think, Gavin, sorry, Justin, go ahead.
At the moment would sort of start at 1 million, because purchase taxes now on over 1 million have gone up to 8.5% as opposed to 7%. But again, it's a matter of balancing it. What liability are you inheriting? What purchase tax are you saving? If those two figures are roughly equal, well, then it can make sense. Mm-hmm. But there is, of course, the added cost of running the company every year of a couple of grand. But as a general rule, I would say that the tendency now is away from companies. There's nothing wrong with them, just the tendency is away from them. And I can never see a situation coming in where a government is going to introduce legislation where it's going to make it beneficial again to have a company. It's going the other way. So
that's the direction of travel, really.
Yeah.
So, Isabel, just on the commercial property end of things, are there any tax incentives for business people?
That is actually, yes, that is a tax incentive. Actually, it's better than a tax incentive. It's called IFRRU. It was meant to expire in December, but the Portuguese government actually has extended to 2023. And it actually works not just for if you're buying a commercial property, but also a home, okay? And I'm just gonna read out some points here. It's out there. If you're buying a little guest house, if you're buying a house, if you're even buying yourself a shop and you want to renovate it, wineries, if you bought yourself like a family winery and you want to improve the building and renovate. And it's set up to the financial structure aiming to support investments in the urban renewal, plus covers, it's not just based on location, it's the entire Portugal. So you can buy something here in Cascais, you can go into Algarve, or you can go as far as Porto, okay, or in one of the islands if you prefer. It is designed to boost investments to support the favorable conditions of urban renewal and the energy efficiency. So the only condition they really have on that is the house must have been built before 2006, which is kind of funny. Being Portugal, you would think something more antique on that. And basically how it works is you go in and you're purchasing, let's say, a property for 100,000. 50,000 of that, it is a tax-free, it's not tax-free, interest-free, it is supported by the European Union Commission, okay? You pay no tax on your 50, and the other 50,000, you go in and get a loan with the bank, it is called the Eurobar. And we work with banks, like reputable banks like the Millennium, that provides that service.
Excellent.
So it's actually really good if, for an example, somebody's coming here, they don't know where they wanted to live, they rent for a bit, they establish themselves, they make a decision. As long as it's before 2023, we got that option there. It's a bit of a complex application. 100%, I recommend it, you get advice on that.
Okay, just I'm looking here on the few of the questions coming through, and I was wondering, Gavin, would you mind sort of taking some questions from a few people in around the area of pensions and residence?
Sure, I think I saw something, some coming in from Patrick Smith and P. Dempsey around pensions. Some people asking, can we give a bit more detail, and others saying, actually, can we be a bit more holistic and give an overview? I'm going to give an overview because it's, again, it's quite an individual area. So what we're being asked on pensions is how will private pensions and civil service pensions and things be taxed? So the way that it'll work between Portugal and Ireland is that the double tax treaty is the overriding legislation. And if the double tax treaty says that, for example, a civil service pension must be taxed at source in Ireland, it will continue to be taxed at source there. There will be other private pensions that will be allowed to be paid gross where the individual is resident in another treaty country. But if we think about how that works with the NHR regime, if it's paid gross, then you'll fall into the 10% category. If that pension is always subject to tax in Ireland, then it will be exempt in Portugal under the NHR regime. At the end of the NHR regime, the double taxation treaty kicks back in again. And what we'll say is, if we've paid 10 euros of tax in Ireland and the rate in Portugal is 15, then you'll have that extra 5 to pay in Portugal. But during the NHR period, you'll have no further tax to pay in Portugal. So if you think that you'll be able, where pensions are being taxed at source in Ireland, you'll have all of your allowances and things to set against that income.
Okay. Arnold, are there any other questions there that are coming up?
Well, I think Gavin has looked at most of them. There is a question here about the NHR. How long days are you required to reside in Portugal in the tax year to be?
I think that would be for Gavin again.
Yeah, that's for Gavin. And then there was a question for Justin, but that's very specific. I'm not sure about treatment of income from Irish ARFs and.
I think it's actually for Gavin.
Okay. Yeah, I'm not sure.
Gavin, you're a popular boy today.
Dennis is asking, he says, once you have NHR, how many days are you required to reside in Portugal?
Yeah.
Again, if you think NHR is a tax overlay, so it's not about residence, it's not about you, whether you qualify or you don't qualify. So the number of days that you spend will depend on the requirement of your visa. So if you've got if you were using a golden visa or a DH7, for example, it would be particular. Assuming you're coming from Ireland, there's no requirement. So you're not using a visa to come. You've got the free movement of goods, people, capital, and services, fortunately, unlike the Scots who voted to remain but have been thrown out. Or dragged out with our southern cousins. So for the Irish coming, there is no stipulation about the number of days that you have to spend in Portugal. You simply have to make it your home. The fly in the ointment is the other side of the coin, which is, well, the Portuguese will accept that your home is here and you're submitting your tax return. Have you truly left Ireland or wherever else? So it's more likely that you have to look at the number of days that you're spending in Ireland to say, do the Irish revenue accept that we've left the country? You don't have to spend any specific amount of time, Dennis, here. In terms of ARFs and AMARFs and so on, I think that's one you've really got to look at. There are so many Irish schemes to get into the variations, so I wouldn't want to get into those specifically, but I think I've covered that in terms of how the double tax treaty then says you won't pay tax twice. And if you have to pay tax on an arising basis in Ireland, you'll get credit for that in Portugal. And under NHR, it would either be exempt or the maximum rate of tax that you pay would be 10%. But you have to look at all of these. In some cases with Irish pensions, you'll even be able to move them out of Ireland. But that's really an area that you want your Irish advisor to be looking at, because they'll understand the Irish pensions better.
Justin, there's a few people asking about, how to apply for residence and different things like that. And you had mentioned previously when we were having a conversation about bureaucratic assistance. Can you sort of tell us a wee bit more about that and what services, and the type of services that they offer?
Well, for example, my getting a driving license, my getting residency, it's not something I would dare attempt to do myself. So there are offices in every village in Portugal where somebody with a bit of savvy arranges to go to the local offices and arranges to get your residencia, goes to the town hall with you, takes your driving license, exchanges it for a Portuguese license, registers a car if you're bringing it in. That's why I refer to it as bureaucratic assistance. They're the person that you pay a couple of €100 to maybe, and they go and they do the legwork and they know what they're talking about, so that when you get to the counter at, for example, the local Foreign Affairs office, and you get to the counter to do your residency, you've got the right forms filled in correctly. Mm-hmm. I've seen, every time I go there with the people to do mine, I see queues of people who are going with the wrong forms, the wrong papers, the wrong documents, and getting frustrated. And for the sake of a few quid, you pay somebody to do it.
Is it expensive, Justin, or, in ballpark figure?
It depends on what you're doing. If it's getting residency, I think the figures would be up to €100. I don't know the exact charges, but these are not expensive. Yeah. And I know that because I've seen the type of people that are using the services in the office underneath our office. These are not people with money. These are the local Eastern European immigrants. They're all using these bureaucratic assistance people because they don't have the time, they don't know how to do it, they don't have the language. Foreigners are constantly giving out about when they go to these offices, how difficult it is. And I always say back to them, well, could you imagine if a Portuguese person went into the tax office in Tralee and didn't speak English, how far they'd get? So I think you get far more help here in the local offices, but I would still say I can't help somebody because I've never done it myself and I wouldn't even dare attempt to do it.
Yeah.
The other thing, Justin, I mean, what at the end of the day, you're saying these people do it for a fee that you wouldn't want to be doing the job they're doing, but they know their job. And I think one of the really important things is that if you use a service like that, if you've used your lawyer and your accountant, then you'll have done all the things in the right order. One thing we come across are people who have tried to do it themselves, and we finish up having to unpick some of the things that they've done. Oh, I applied for my residencia before I arrived. We'll say, well, that effectively made you tax resident. Have you put a tax return in? Well, no, I'm still in Ireland. So, wait, do it in the right order. And again, these people will help you to make sure that it's all filled in correctly and done correctly. And I think, as Justin says, a couple of €100 and you'll get a lot of work out of them for that.
Yeah, and a lot less stress.
A lot less stress. And Isabel, you were mentioning too, just because you have more recently gone through the whole process of moving from one country to another, that you're happy to help anybody with any sort of pointers.
Yes, and I can see some questions floating through that, and I'm just going to give us some general idea. Look, the most important thing is I recently moved here. I moved here in October after traveling since 2018, every 6 months to Portugal. So the first thing to do, you need to get your tax file number. You have to get what it's called NIF. You actually do need to get a representative. Normally your lawyer can do that for you until you resign here until you move in as a resident. After you moved in here as a resident, you actually have to, let's say if you go down the path of renting, you need to make sure that you have some documents in place for your renting, not just your rental agreement, but also you need to make sure that your landlord has certified your documentation, the rental agreement with the Department of Finance. That is like pretty much your gold card in becoming your resident here in Portugal. If you are outside the EU, I'm not sure if the same thing works for Ireland. That's very crucial. You actually have to be in Portugal for 6 months until you can take over your own tax file number. Okay, just a bit of a guide is that. Until then, you have to pay your representative. I'm just going to put a warning out there. Be mindful, communicate, make sure you get your quote up front, because anywhere we go, we might meet some sharks. So I'm just saying that from the heart. I noticed there was a gentleman here that questioned about the nomads. He's stuck in Portugal for 6 months now. Basically, depending on your visa, if you just came in on your 3-month visa, the Portuguese government has extended your visa until the end of March. You can apply for a temporary residency.
I think Isabel, haven't the Portuguese government been somewhat lenient and understanding, and they've offered more understanding to people who have become stuck essentially because of COVID.
Very understanding. The other people that might be on the phone call, that might be getting a bit frustrated with SEF. They're not picking up.
What is SEF? Sorry.
Sorry, apologize. The immigration department here.
Thank you.
This is where you go to apply for your temporary visa, anything to do with to get your residency card. Okay. So they've been very lenient. For the gentleman of the nomads, he welcome to send me a one-on-one question, and I can answer him in detail on what to do. And so that's pretty much it. I think. Did I answer your question?
So Gavin, I'm going to come back to you, because NHR, non-habitual residence, for a period of 10 years, that sounds wonderful, but you deal with a lot of people who are in retirement, and I would hope to think that the retirement was going to last longer than 10 years. Are there things that you can do from a financial planning perspective to, support them with that and to make sure that it continues to be a tax efficient retirement, I suppose?
Sure. I think a lot of that, Sharon, is in the planning and saying, do we understand the assets that we have? Do we understand the income levels that those will produce? What about inflation in the future? And so we will do, as financial planners, a plan through in terms of their cash flow modelling and so on. Then that takes us to a point in saying, well, now how do we make sure that these assets are as tax efficient as they can? And within the European Union, we've got a number of jurisdictions, places like Dublin with its international financial centre, Luxembourg similarly, and these financial centres produce European Union-wide structures that will allow your assets to roll up entirely free of tax, and you only pay an element of that tax when you take income from it. So all of our planning would be around how to structure your affairs tax efficiently in your lifetime. And then beyond that, saying what's the succession plan from there and how do we get that into our heirs' hands? So we talk about the right money in the right hands at the right time. And the intention is to make that as tax efficient all the way through as possible. You've got people say, oh, well, there's no inheritance taxes in Portugal. And we say, yes, but you've still got capital acquisition tax in Ireland. So while you might not be being taxed on your assets after you're dead, the person receiving them might be. So you've got to be, especially cross-border, Sharon, we've got to be thinking about where are we going to be spending the rest of our life? Do we intend to return to Ireland or our home country at some time in the future? What planning needs to be done for that? And you're looking for structures that will provide that tax efficiency all the way through.
Excellent. And Justin, just on succession planning and talking about wills and powers of attorney and things like that, what advice, if any, would you have in that? Like, do we need a will here in Portugal or what?
No. And I saw one of the questions referred to that. And unless the home will, and I was to say home, unless the Irish will specifically excludes Portuguese property or specifically says it only relates to Irish property, that will is perfectly valid in Portugal. So there's no need to do a Portuguese will. The only reason I think we've ever seen a need for a Portuguese will was because the Irish estate was very, very complicated, and having a Portuguese will to deal with only the Portuguese property made sense that it wouldn't be held up until the Irish estate was all wrapped up. But as a general rule, I say to people, just ensure that your Irish will doesn't exclude Portuguese property. If it does, amend it so that it specifically includes Portuguese property, and then that will is perfectly valid in Portugal. Portugal never used the forced heirship rules for foreigners that Spain does. So people tend to confuse that. In Spain, you cannot disinherit your children unless you do a Spanish will. That does not apply in Portugal. And an Irish will is perfectly valid here.
Okay, so it will override anything here. And
but going on what Gavin said, what people tend to forget is that whilst there's no inheritance tax in Portugal, it's where the person receiving the gift lives that matters, not Portugal. So if two parents were to die in Portugal and leave all of their assets to their kids, if the kids live in Ireland, it's Irish tax that applies, not Portuguese. So it's very difficult for people to do tax inheritance planning unless everybody that's involved, including
on the same page, really, I suppose.
Well, kids would all have to live here to avoid the capital gains tax. So
is the probate complicated or is it straightforward?
We're really doing the probate. Usually we're just transferring an asset. So it's not actually probate as it is in Ireland, wrapping up an estate, because 99% of the time when we're involved, the only asset is the property in a bank account. It's usually not all of the estate. And it's a matter of simply transferring the asset to the heir. So it's actually quite a simple matter. One big difference to Ireland is that you don't have joint tenancy. In other words, a husband and wife don't own a property together. They own 50% of it each. So when one dies, the share of the deceased has to actually be transferred to the other or to the children. Whereas in Ireland, it just automatically passes to the survivor. But again, it's not a complicated process. So it's simple transfer of a share, very low taxes on it because there is no transfer tax on a share, on a transfer of property within a family. So there's no gift tax and there's no transfer tax.
And if I've severed my ties and connections in Ireland, Justin, and I've landed in Portugal, can I take the exact wording of my Irish will to leave assets in the way that I couldn't do it under Portuguese law through forced heirship? Can I register that will here in Portugal in the same way?
No registering, because again, your Irish will is a different concept as how it's used, because the concept of leaving on trust, which most wills do, concept of trust doesn't exist here. So there is nowhere to register. You either do a Portuguese will, which is registered here, it's a public document, or you rely on your Irish will. But there's certainly
I can replicate the intent of my Irish will in a Portuguese version.
You can do. I don't see any reason why you would want to, because it's an expensive process, but there's no need to.
Okay, you would just leave the Irish will in place.
Irish will is perfectly valid.
You say, Justin, the only reason that you would maybe separate them out is because to take care of the Portuguese property separately if it wasn't mentioned in the Irish will.
Well, it will usually be mentioned because it's covered by all the rest of my estate.
Yeah.
But we've seen a situation where there was a very large estate in Ireland, and the guys didn't want to delay the transfer of the Portuguese property until all of the estate was wrapped up. So they did a separate will just to deal with the Portuguese property. But that was a very unusual situation, and it's certainly not common. Yeah. So in most cases, when we're asked, we recommend the Irish will is valid. We always suggest, if they want to, that somebody would send us a copy of the Irish will for us to review it. But I'd say a tiny, tiny percentage of them have we seen that we've said needed to be amended, needed anything done with them.
Okay. So Gavin, just on that longer term financial planning, if somebody decides maybe to move back to Ireland, are the structures that they would have set up here in Portugal, would they be portable?
That would be the discussion with the client at the outset, to say, look, tell us what are the possibilities and what are the probabilities in your life. Is it possible that you'll return to Ireland, or is it probable that you'll return? And if it's probable that you're going to return, then you'd say you definitely want to be setting up structures that were portable. And again, the European Union allows us to do that. It allows us to set up investment structures and products that can move between countries. You might need to realign some of the wording or the technicality around the documentation, but if you're using a true pan-European company to do that, then they'll have the ability to make that fit.
That's very reassuring for a lot of people, because, well, none of us know really what's going to happen. Isabel, just on that, and the unexpected, in a business point of view, and closing up, how easy is it to close up a business?
It's actually it's not as complicated as opening, even though opening it's pretty straightforward. It's just making sure you're winding down your bank accounts, making sure all your taxes are paying. Also, that is quite a bit of a support in that at the moment. If it's anyone in the group that's listening that has an existing business and they're going through a little bit of struggle, that is a bit of a support there from the Portuguese government in redundancy packages for staff. So that's also available. It's a straightforward process. Again, you need to be in touch with your lawyer to winding down, closing down the company and doing all the legal things. One thing I want to add to residents, people are questioning about being in Portugal. Basically, since 2015, there was a law by the Portuguese that was reinforced that if you have lived in Portugal for 183 days of a financial year, doesn't have to be consecutive, you are considered a Portuguese resident for tax. So therefore, you need to consider seeing an accountant and having your taxes lodged here.
Yeah, although I think in the last year and to date, as I say, because of COVID issues, a lot of people have been trapped.
Yeah, the trap is a different story. But if you can here, because a lot of people do that back and forward, but if you have lived here for 183 days, you should be seeing someone, an accountant, and making sure that you're doing the right thing. Is to also do the right thing. And also the point is, if you fall in love, planning to stay, that also helps towards your visa application. Because
I think Portugal do have a de facto residence, don't they, Isabel? So, you know, really, it's from day one, from your date of arrival.
The moment you arrive, the moment you landed, and if you're here, if you just came in within the EU, or someone like me that came in from outside, that came in with a D2 or D7 visa, the moment you landed, and it starts to tick. But it's nothing to be alarmed of it, but just make sure you get your things in order, because you never know.
I would just say on that, from experience, unless you go to the authorities and tell them you're here, they don't know. And I know people who've lived here for 20, 25 years full-time and are still not registered in Portugal for anything.
But you want to do the right thing, right? This is your new home.
I'm just saying, the authorities here, because of this, there are no borders to Spain. I know of people who have rented properties in Portugal to get the NHR in Portugal, and they've been probably here the day they saw the property, and that's it. There are no controls because there is no border. So it's a case of, yes, if you should do the right things and register, but if you don't, they don't know you're here. It's within the EU, within mainland Europe, there are no borders, so the governments have no ways of tracking people down as to where they are.
But isn't that, you know, becoming a smaller world, Justin, now?
Sorry?
Isn't it becoming a bit of a smaller world now?
A little bit, but one of the things, like what Gavin was saying earlier about, if somebody's coming here to do the NHR or to do the golden visa, Portugal, number one, probably hasn't got any method of checking, but number two, is not interested in checking if you're spending your time here. They're gaining. The one you need to be careful of is the country you're leaving, who's losing you as a taxpayer. So I remember going back to the early noughties when lots of clients were moving here to avoid paying capital gains tax legitimately. They never had a problem with the Portuguese authorities proving that they lived here, but they had lots of problems with the authorities in Ireland and in the UK saying they hadn't really left. So Portugal is very easy like that because it doesn't have a system of, nor is it interested in checking if you are here. So it's the country you're leaving that you need to be careful of, because
there is a direction of travel here, Sharon, as well. So if we think about the conversation that we had earlier about offshore companies and how they were ubiquitous in the noughties is probably the right description. Everybody had them, and gradually the direction of travel is we're moving away from it. The direction of travel with compliance, exchange of information. And when I arrived here, my accountant told me not to worry, that the banks would never ever disclose any information to anybody. I said, what about the European Savings Tax Directive? What about this exchange of information, the Common Reporting Standard? And of course, he hadn't heard of all of those things coming in. The direction of travel that's going there. Today, just to counter Justin's points about, you know, not knowing, it's certainly where he's right. It's where we are today. However, if it comes to it and they want to prove it, I know we've had a case here in Portugal where the client was told if they really weren't here for 183 days, Mr. Client, somebody's been breaking into your house while you weren't here and phoning all your relatives. Our electricity bills, our telephone bills, our mobile phone data and usage. So if anybody wants to prove where you are, you don't see at the airports now, arriving back in Dublin, you don't see the cases as you used to see in the 70s and the 80s. And Justin will remember the 60s, people pulling things out of suitcases and, you know, passing straw donkeys to hold while they search through it to see what's hidden inside it. Are you smuggling back a bottle of ouzo from Greece? That doesn't happen because everything is information related now. The authorities already know who's on the aircraft. Why? Because we tell them, we give them API, advanced passenger information. You fill out your Ryanair ticket, you can't get on the plane without them having checked your passport 3 times before you get on that airplane. They know who's arriving. So all of that information is available to the authorities. And the one that's coming in 2022 is a pan-European agreement to track people coming in so that they can identify the 90 days in every 180 rule. So while this may be the situation just now that everybody's quite relaxed, the controls, and Big Brother is coming and Big Brother is watching, as already knows. The problems that the authorities have is that they can't necessarily use the information that they have because of how they've collected it, as Just will tell us it won't stand up in court legally, but they know, everybody knows where we are and what we're doing. We leave muddy footprints everywhere.
I think so. Nowhere to hide.
Digital.
Arnold, I'm just asking to see if there's any particular questions that could be answered, because we're coming near a close now. We're close on an hour.
Yeah, no, I think you have. I think you have covered lots of really great information that you are giving. Really, really good. And I think you have covered most of the questions. You know, we can always go back to some of the questions to give a bit more information, but I think it's all good.
Okay, well, I would just like to thank the panel and to everybody, obviously, who took time to attend today. I hope you found it very useful. And I'm just going to hand over to Arnold to close out the meeting and obviously talk about our next webinar, which will be due, I think, Arnold, what, the 10th of March on all things property?
Yeah, correct. So tomorrow I will be sending the recording of this webinar to everybody who attended today and all the people who couldn't. So you will also have the information, the contact details of the different guest speaker if you want to continue the chat or have very specific questions to them. And then yes, so the final webinar of this series will be on March the 10th. We will talk more about the property and the rental a bit more in details. I know we covered some of the points here, but we're going to have another panel there. And yeah, that will be it for the moment for this webinar series, but we will look.
Yeah, it's just also to say, Arnold, that the lifeblood of any network is in its members. And we're here to support. So if you want to explore that further, don't hesitate to get in touch with Arnold.
Yeah, great, excellent. Thank you, Sharon, and thank you, Gavin, Justin, and Isabel. Thank you very much.
Thank you.
Okay.
Thank you. Bye-bye.
Bye.
Everyone. Bye.